Traders, welcome to our non-farm payroll bonus session in the Sector Secrets Mastery. Great to see you all. We are also actually just for this particular session streaming to YouTube and my Twitter and some other folks. So just giving y'all a sneak peek of what we typically do during this session. And so we're going to go ahead and trade non-farm, and I'm going to walk you through what we do to trade a and by the way, the note that you'll see on the left side, this is how we do the chat room in the Sector Secrets Mastery. We send out alerts, of course, but we also have a running set of notes, ideas, symbols, watch lists that we're watching to make sure everyone's on the same page. So if the inevitable disruptions occur, okay, this is what happened while I had to step away. All right, so let's get to it. We're going to be together for the next 30 minutes. And remember, this is not just about trading non-farm payroll. This is also the macroeconomic impact of this data after we've heard from the Federal Reserve. And so jobs and inflation are their dual mandate. So if you want to understand macroeconomics and not the gobbledygook of macro that people like to sling around, two main pillars, because they have two mandates. Get to the inflation target without breaking jobs. I mean, that's really it. That is the job of Jerome Powell and company. All right, so let's get to it. I'm going to keep both these windows up. Should be good to go with that. All right, there we go. I think we're all set now. I can see everybody. All right, cool. All right, so let's get to it. There's only two symbols I'm going to look at. This is, of course, futures trading. So the focus on this session is absolutely futures trading, because with this session, it's pre-market. I don't like that word because it's somebody's market. Somebody's awake, right? It just happens to be before the Wall Street bell, as if stocks really are the only game in town. We know that's not true. This is futures trading. This could be mini. This could be micro. If you've never done something like this before, an 8:30 economic event, believe me, pen and paper. There's no reason you ever have to trade a session like this anyway. But like I said, even if the takeaway isn't a trade idea, you get some ideas on how I set up day trades. This is just a kind of day trade. And you'll also see how the macro is going to move our target rate probability. So we have a lot to do here. I'm going to focus on two symbols and two symbols only, not gold, not bonds, not euro. Those are usually going to have massively outsized moves on this particular hot zone, on this particular release. So usually I'm just going to focus on one or two at most, maximum. And that's going to be the ES and or NQ. All right. So I only have to set up two things, risk on two things, managing two things. 5-minute time frame. All right. So I'm going to look at the 5-minute chart with hourly price movement ranges. The best and frankly the only tool I know to measure historical volatility on the specificity of 8 to 9 a.m. That's a really big deal, gang. Do I want to look at all the hours of a 24-hour session and incorrectly presume they're the same? They're actually not. We all know this. 8 to 9 p.m. is different than 8 to 9 a.m. 10 to 11 a.m. is different than 6 to 7 a.m. Each hour presents some different characteristics. We're looking specifically at this hour of the day. What is the behavior? What is the volatility? All right, so hourly price movement range. And here's how easy it is. This is what I'm going to do. What is my directional bias? Well, it is, it's minorly. Yesterday's close on the ES, and sorry, gang, for looking away here. My Sector Secrets Mastery folks, I'm not on camera, but in the YouTube, I have the 9 monitors in front of me. So I'm just taking a look at what's going on here. And yesterday's close was, survey says, 49.59. All right. So 49.59. Are we above or below that level? Just below, right? For just below that level, what that means is we're minorly, and I do mean minorly, on the bearish side of things. So I'm looking at this morning as a bracket, right? Could go either way. I will be ready for both. Because really what's cool is because we use limit orders, right? Limit orders only, never market orders. Does anyone actually think we're going to sit here with a mouse and try to capture a market order when those crazy wicks go by? Ditch the market orders. They are inaccurate when it comes to fills. Someone says market order. Well, what's your fill? Are they all going to get the same fill? Probably not. And we need a trigger, right? We need to know that when price reaches this level, we're going to get in or we're going to get out. So why not use a price conditional order? It helps with the discipline. And market orders, quite frankly, are really a dopamine hit and a gateway to overtrading. If you're overtrading right now, I would say eight times out of 10, it's going to be started, the process. The first domino to fall is a darn market order, okay? I never use them unless there's something really wrong, and then that's my fault because I put myself into a reactionary place with the market, not a proactive, right? Okay, so limit orders. The zones have to be taken as late as I can possibly take them and comfortably put in my limit order. So I like to do that around 8:25. HPMRs will be read and limit orders placed. So I'm going to wait just about 2 or 3 more minutes. While we're waiting, I'm going to take you on over to my website that I love to look at before any kind of hot zone that could make it be a needle mover for the macroeconomic view. CME FedWatch. It doesn't get any easier or better than this to decode macro. So take a look. March expectations are 63.5, wow, for a hold, and 36.5 for a cut, quarter point cut. All right, let's look at May. Right now, what's happening before NFP. In May, we're looking at an 8.4% hold, which is to say we're still at 5.25 to 5.5%. We're looking at a 59.9% likelihood for the cut, right? And then lastly, this column there, 475 to 500, all right, that is actually saying that March cut, right, and May cut, right? That's what that is, and that's sitting down at 31.7%. So does that mean that we're expecting a half point cut? No, what that means is the presumption that March was a cut and May was a cut. And we'll push out to June because we've got the time. All right, for June, you can see here, again, there is no, a cut has happened. June has said a cut has happened by now, right? Because there's not even a 525 to 550 column. So the main thing is that here we have 7.9%. I'm going to just put 56.7%, 33.4%, and then lastly 2%. So this is for the 7.9 is that we had a quarter point cut and that we're going to hold. All right. This is for another cut. And then the last two presume March and May cuts. That's really it, right? And you can actually download these images. So let's say you want to go to May. So you know what, Rag, I really want to download this this image, right? I really want to grab this image and download it. You can, right? You can. And so I'm going to go ahead and do that. This is the so this way I've got it. And my mastery folks, I'll put this in our notes as well. And I'll go to June. Let's download that as well. Download the image. And I'll put this as June. Boom. And while I got it, while we're in here, let's just grab March as well. So I'll put all these so we can see what they look like before and after. Because this is the macro, gang. Macro is what? Oh, no. It's not. Don't Google it. That's macro. Macro is whatever Jerome Powell says it is. All right, it's 8:25. So back to the charts. Let's grab our zones. The ES zones start at 49.70 and a half, 49.75, and then I'm just going to go with 49.80 to the upside. That is the red zone. And then I've got 49.50 and a half. And then I've got 49, was that 49.46? And then I've got 49, 41 and a quarter. That's the green zone. Now green is support, red is resistance. So there is my limit orders to sell, limit sell, because that's resistance. And the green, those are my limit buys. Okay. All right. The target in the middle, 49.60. That's it. That's it. So now I'm going to place those orders in just a moment. Let's do the same thing with the NASDAQ. All right. NQ. Now this is the NQH24 contract, by the way. NQH24, ESH24. You can use the micro, gang, if you're going to do this at all. Okay. You can do the micro as well. All right. Yeah, it's in the weekly. Yeah, just tell them to refresh. My mastery folks, just refresh it. I did add it to the weekly. Okay. Just refresh your workflowy. That ought to do it. If not, here just in case. But yeah, if you refresh it, it's there. Okay. I added it this morning. So let me do this here. Copy. There we go. Just in case. There you go, gang. All right. Back to our orders. All right. So NQ. And by the way, my mastery folks, you've got these hourly price movement ranges as part of your subscription. So you should be able to run these on your Thinkorswim because we make these available to you as part of the mastery, these particular indices, right? So make sure you remember that you've got these. You can run on your charts too. How cool is that? 702 and a quarter. So this is my red zone, and this is where the limit sells are. We'll talk about risk in a moment. The risk is not small, gang. The risk, if you're not getting butterflies putting these orders in, you are not respecting what this particular hot zone can do because it is either really great or it is brutal. Okay. So now I've got 17,536 and a quarter. All right. These are the green zones. These are your limit buys, right? Your T1, your first target, smack dab in the middle. 17,619. Do not place your target order because we don't know if that's going to be a limit buy or sell. It depends on which end of the ranges get hit because we're going to be bracketing these, right? So what happens is when you bracket, what's kind of cool is when you bracket, you are actually setting up an entry, right? The first limit that gets hit is your entry. The second limit out there is your second target. So when you bracket, one's going to get you in, one potentially gets you out. Okay. That's why I'll place both ends. Please know we are minorly bearish, right? Which is to say we're below the previous session close. And hang on, let me do this here. And I would minorly prefer a short. But if we get down into the green, we get down into the green. You can go to the further edges of the green. So you don't have to place the aggro. You can place a moderate or the conservative, which are those levels that are lower in the green zone or higher in the red, right? All that is viable. So I'm minorly bearish because we're below the previous session close. Notice the 5-minute is neutral trend and neutral momentum for that matter. Okay. And that's it, gang. That's it. So I'm just waiting now. We're going to get our data. Boom. There it is. There it is. Now, what's happening? We're getting some selling. Take a look at the NQ. NQ zones. And by the way, the reason we take these before the hot zone is because all the zones are going to move based on the volatility. So you can't look at them now. You got to look at them before the release. Okay. Now, again, aggro, we were so close to the aggro. It was very close, right? Moderate was further away. So just to give you an idea, there's nothing for me to do now. I'm in, right? Moderate is further away, and conservative is the furthest, which is to say, in terms of risk, the further away you are from current price, potentially the less risk you have. All right, now what? You might say, okay, Rag, what are you taking heat on? I'm taking about 10 points of heat on the conservative level at 17,536 and a quarter. All right. And these are not big position sizes, gang. Is it fun? No. But is it what I'm willing to take? Yes. I mean, you all have seen me when we take out 60, 70 points out of non-farm as well. All right. So then I'm going to have to give this about 180 seconds. Right. Remember we said we were minorly bearish? I would have loved for the green zone to get hit. That would have been ideal. Right. Because I'm minorly bearish, because we're below the previous session close. But we didn't get the green zone. We didn't get the red zone for a short. We got the green zone for a buy. It happens. All right, take a look. When I'm looking at my buy zones, 41, 49, 41 and a quarter. So 41 and a quarter, we're back at that. Look, the first 180 seconds are chaos, right? It's just madness. We just have to take a breath. I know it's not fun. Remember I said this is high risk, right? You just have to take a breath, which I did. Look at your charts. Don't look at your P&L. I got a glimpse of my P&L there for a second. It'll, like I said, it'll get your stomach flip-flops for a second, because we associate negative and positive. We get really excited when we're making money. We get depressed when we're not. Look at your charts. I'm not even looking at my P&L. A lot of times I'll take a little sticky note and I'll place it on top of my P&L, just so I'm not letting the dollars make the decisions. I want to let my levels make the decisions. That's really it. So the proximity to the aggro and moderate, I did put a little in at moderate, most of my positions at the conservative. Aggro is really close. I wanted to show you those zones. And I know a lot of you in the Sector Secrets Mastery already know risk is from the entry to the stop. So the further away the stop is, obviously the larger the risk. So now let's talk about stop losses. All right. Now, if you're watching this for the first time, for crying out loud, I didn't even give you a stop. You don't know the process. Just take notes, right? I love when traders think, oh, I'm just going to trade blindly and follow Raghee or whomever into a trade that I've never done before during one of the most volatile hot zones there is. Please take notes. We can do this with initial claims, GDP, PCE, CPI, any of these hot 830 hot zones. This just happens to be lava hot, right? And I love to use these as a barometer, as a litmus test for the process, right? So the stop loss is really straightforward. The stop loss is one of two things. I'm going to wait oftentimes to see where the minor low is. So take a look at where a minor low is. Right now it's sitting at about 49.34 on the ES. So a lot of times the stop loss is very much reactive to the initial move on the data. Or it's an hourly price movement range shadow, meaning whatever the height of the zone was, I placed that below the zone and it becomes a shadow. So like I said, it's a lot of risk because we have a lot of volatility here. On the NQ, let's take a look here. And I'm still a little underwater, not terribly. All right. So on the NQ, we'll talk about where I'll finally just pull the trade. I'm not going to add in those kinds of things. If you've ever followed me in the Mastery or in the Simpler Central room, you know I don't add to positions. If I'm wrong, I'll take the hit. If I'm right, I'll pay myself. It's just really that simple. So on the NQ, as you can see here, right, our minor low is sitting down around 17,506. That's my minor low. That's my minor low, at least for now. You see, now that we've got the 5-minute candle, right? So I've got my minor low. Again, two ways I'll typically, there's actually three ways, but on non-farm, the third way is really not all that realistic. The three ways that I'll place stops is a stop just below the hourly price movement range. You can do that for initial claims. You can do that for GDP. Heck, you can even do that for some of the inflation numbers. But for things like non-farm, way too much volatility, way too much. So I'll typically go with the minor low stop loss or the HPMR shadow stop loss. It gives me that volatility cushion. All right. Everything else, I can place a stop just outside that reading. So if I'm long on sort of a less hot zone, and I see that my support zone, my lowest level is 17,536.25, I can place it a handful of points below that. On the S&P, it's 49.41.25. I can place it a handful of points below that. Otherwise, I'll just keep an eye on that minor low. And that's it, gang. That's it. Now, I know my mastery folks, this is probably, I'm trying to think of the hot zones we placed in the past. It's probably the third or fourth NFP we've done in the last 6 months together. I almost always trade these. I hesitate to always do it publicly because I don't want to encourage people to trade this hot zone if they never have before, because clearly if you get stopped out, it's going to hurt. In this situation, you might say, okay, Rag, now what? Anytime we trade high impact zone hot zones, the way that I've position sized, this is really huge. All right, this is really huge. Position sizing is the only holy grail. All right. So when I position size the number of contracts that I'm willing to take, usually I'll factor in the hourly price movement range shadow. My max risk on the trades are about 3%. I think my max risk on the NQ I calculated for about 2.5%, 3%, and my ES is at 3%. So I have a 3% risk to the account. Yeah. Okay. So position sizing is the holy grail. My max risk. Now, how do you know your max risk? Take a look at the hourly price movement range. Know the range, right? If I want to take an aggro, either that range has to be narrower or we have to travel further to get to it. So if you're asking yourself, Rag, how do I decide if I want to be aggro, moderate, or conservative? Crunch the numbers. Ask yourself, if I take aggro, an aggro entry, and those are all listed there, they're the first level we hit to the upper downside. If I take the aggro and I go to the HPMR shadow, can I manage 3% or less risk to my account? I couldn't. That's just a no, right? I cannot manage that amount of risk from that level and stay within 3%. So I can do one of two things. I can reduce the number of contracts that I'm trading at each one of those triggers, or I can just forego that trigger and focus on moderate or conservative. Even from the moderate, I was pushing my luck, right? That's why I said most of my position was sized from the conservative, because when I do the 3% to my account risk calculation, and my mastery folks, you've got that spreadsheet in the members area. Now, how does it change with futures? Well, it's $20 per point on the NQ. There we go. It's $20 per point on the NQ. It's $50 per point on the ES. This is where micros are great as well. And that's it. So I know worst case scenario, if I lose on both these, which I very well might, I'm down a little bit less than 6% in my futures day trading account. I'll sleep okay at night. I'm still going to have a really nice steak and lobster dinner. You know what I mean? Nothing here. Does it sting? It should sting. It should feel like a paper cut, but no one here is losing a finger, right? So all appendages are intact. And that's it, gang. And that's it. Nothing more to do. Is it what I wanted? No. Have we had better non-farm payrolls than this? Absolutely. But there's nothing for me to do. At 8:39, price is still in, as I like to call it, although I hate to be in it, no man's land, which means haven't stopped out. Not that I'm daring the trading gods. Haven't stopped out and haven't hit my target. There's nothing to do. That's it. It's a pretty uncomfortable place, especially when no man's land is in a risk situation, right? We're not looking at an unrealized P&L that's positive. We're looking at an unrealized P&L that's negative. So if this is the first time you've been with me for this hot zone. Notice position sizing is everything, right? In fact, I've got a class coming up in April. I know that seems way far away, but I've got a class coming up in April where we're going to talk about structure. We're going to talk about trends, HPMRs, DPMRs, and absolutely position sizing. Gang, there is no secret indicator. Although I've created almost every one of these indicators on my screen are ones that I've created for myself to answer questions that I had about the market. What's the trend? What's the momentum? What's the volatility, right? Where's the support? Where's the resistance? And automate it. Automation is the key because it takes me out of the process. Sequence, automation, right? That's where the confidence comes from. Because if I was always just sort of slinging contracts everywhere, I've got no process. If I've got no process, I can't test it. And if I can't test it, there's no confidence that I have in my process. I'll tell you what, gang, I glanced at my P&L twice. I shouldn't have done it. Every time I'm thinking, oh my gosh, that kind of stings. Now I'm up, right? But the best thing to do is cover up that P&L, follow the process, and remember that we're going to be right more often than we're wrong. And as long as we limit the risk when we're wrong, we'll be okay. Notice that I had to sit through almost 12 minutes, 10 minutes, 11 minutes of, frankly, being pretty uncomfortable, right? And so a lot of folks ask me about now, hey, Rag, now we've got some pretty good profit. In fact, our profit is equal to, if not slightly greater, a little lower than the unrealized loss that I had. This unrealized profit too. Rag, is there an optional target? Let me show you what you can do. Right? I know a lot of you are saying, Rag, we're finally positive on this thing. Can we at least move to a break even or pay ourselves? Okay. What I would say is cut the non-farm payroll candle, cut it in half like a sandwich. If you want to scale out at 50%, go for it. There's your Pingala. Run the retracement on that candle. There's your Pingala. And that's sitting at 560, 17,560 on NQ. Two things you can do here. Move the stop to break even and or scale out and move the stop to break even. So all I'm doing is cutting that giant candle in half. There you go. And I don't know why we hit the halves. Don't know why. It just works out that way. Okay. And on the ES, that would be sitting at about, 49.46. 49.46. Now remember, my T1 was 49.60. So we have an optional 50% NFP candle. I hope this is helpful, gang. I hope you can see I was sitting in a pretty decent unrealized loss, but there was a process. I wasn't adding, I wasn't moving my stop around. If you follow me, this is the same process we use all the time. What's the minor low? What's the hourly price movement range shadow? Do I have an oversold buy on my hands? I do. I would have rather been short, but I didn't get it. Yeah. So now, pay yourself, right? And don't do yourself a favor. I'm looking at my P&L now. It's pretty damn good. However, don't get excited. Don't get excited about that. It's just our job, because if you get excited about that now, that means you were ready to lose your breakfast when we were going lower. Keep an even keel. If you celebrate wins, that means you're also going to get sad and want to crawl into the office and go into the fetal position when you're in a loss, and you're going to not think clearly. Notice how we just followed the process. And I hope that my doing this, and I love that we were sitting in an unrealized loss, but valid, right? That we could all do it together, and I could walk you through the optional, which we've all been able to hit. Right. So look, I've been saying this for 32 years. And I think of my father-in-law a lot. We lost him about a year ago, just over a year ago, to ALS. And I always smile when I make a trade. And I always say, rather be lucky than good, right? Rather be lucky than good. And follow the process, right? Follow the process. You're going to be lucky more often than not when you follow the process. So please be at a break even now. So NFP optional, God, got myself all emotional. NFP optional T1 is that 50%, our Pingala, as we like to call it, right? And move to break even, for crying out loud. Don't hate your money. Okay, move to break even. And right now it's 8:45. So that's the end of our session. We're at break even now. That's it. That's it. We put a quarter in the machine. Whoa, it was a rough ride. Stayed within our validity. Minor low held. And by the way, Rog, if we got below the low of that candle, would you get out? I have to. Because now I know my calculated 2.5 to 3%. I think my was 2.75 and 3%. So almost 6% of my day trading account. You might say, Rog, that's bonkers. That's non-farm payroll, right? That's non-farm. So that's it. That's it. All right. Okay. Is this for everybody? No. On such a high volatility event, is there any merit to using standard deviation lines? You mean standard deviation of what? Agro mids. I mean, look, on a high, so what I would say, they're not, I would say go with, so the question is, on such a high volatility event, would it make sense to only go with conservative? Yeah, Stonsky, take a look at the replay, and I talked about knowing what your risk was. Yeah, if you just want to hang out at the upper edge of the red zone and the lowest edge of the green, that's no problem. Yeah, because if we come back, what do I care? I'm going to get stopped at a break even, which is about what I'm at right now. Okay, I'll get stopped at a break even. I'm risking unrealized profit at this point. Now notice, I'm likely to get stopped out of ES. Interestingly enough, I'm not that close on NQ. Okay, so ES is about to get stopped out. Pretty close, but NQ is not as close, although we'll see what happens. So break even stop means exactly that. What did you get into? Maybe risk another quarter or half point at most, but that's it. When we travel back down to where we got in, done, right? Done. So my moderate is out. I'm actually still hanging on to my conservative. That was a rough one. I'm kind of glad y'all got to see me go through one that just wasn't wick and then make all sorts of money. The last non-farm payroll was exactly that. It wicked down, hardly gave us any heat, and then just took off. Those are the easy ones. I'm kind of glad we got to do a tough one here. All right, cool. That's kind of cool. I'm glad we got to do that. I'm glad we got to talk about position sizing and stop losses. All right. Anyways, that's a wrap. I'll see y'all in Charts and Coffee at the top of the hour. Be good to each other, gang.